So many people ask, how do you stay patient when the market is going crazy? Patience isn't a nice to have in investing. It's a need to have. In today's video, I'm going to show you how to build real disciplined patience as an investor, even in the face of noise, fear, and FOMO. Because the truth is, the market rewards the patient, not the perfect. So let's start here. Why is patience so powerful in investing? The market isn't a get-rich-quick machine. It's a long-term wealth builder. Most of Warren Buffett's net worth came after he turned 60. That's 60 with the 60. That's not an accident. That's compound interest. Here's the kicker. The longer you hold good investments, the more time you give them to work. If you keep jumping in and out of stocks, reacting to headlines, you break that compounding chain. So the question becomes, how do we hold through the noise? So how do you understand market noise? So every day, the market throws headlines at you. Recession is coming. Technology is dead. Buy this. Sell that. But remember this. Noise isn't information. Long-term investors train themselves to separate signal from noise. What matters is not what the market does tomorrow, but what great companies do over the years. Coca-Cola didn't stop growing because of a bad quarter. Apple didn't vanish after a stock dip. So rule number one is ignore the daily drama. And this is very hard to do if you're someone who likes reading the news and catching up with what's happening, because you are tempted to act on that drama. I'm going to give you 5 practical habits for building patience. Let's get tactical. The 5 practical habits to train your patience. And this is what athletes do. They have their tactics that they use to develop certain skills. For example, boxers, they do the skipping rope. They do all sorts of things to improve their hand-eye coordination. So I'm going to give you 5 practical habits to train your patience. So number 1, zoom out. Use 5 or 10-year stock charts, not daily candles. Long-term charts remind you that volatility is normal, but growth is powerful. Number 2, track business progress, not price. And this is what I've learned to do over the years. Follow the quarterly reports, follow the semi-annual and annual reports, follow the motto of the company, and follow management, not the price of the stock. Ask, is the stock getting better? Number 3, set it, forget it, and review quarterly. Check your portfolio monthly or quarterly, not daily. Reduce the temptation of acting on the noise. Number 5, study the greats. Study Warren Buffett, study Charlie Munger, study Benjamin Graham. They weren't market timers, they were business owners with patience. It's just like when you buy a house, you don't go and check the price of that house every day. You buy and you hold. And after 10 years, you sell that house for twice as much as you bought it. I'm going to give you 4 mental modes to stay calm. These mental modes help you to stay focused, and they help you to think like a patient investor. So number 1 is the farmer's mentality. A farmer doesn't plant a seed and go dig it up 2 weeks later. They trust the process. Investing works the same way. Number 2, margin of safety. When you buy with a cushion that's below intrinsic value, you don't really worry about the short-term swings because you're playing offense and not defense. Number 3, circle of competence. If you buy something you know like the back of your hand, You are not going to be selling at the first headline that comes out the newspaper or the first headline that comes out of Bloomberg, because you know what you're holding. Confidence breeds conviction, and conviction fuels patience. Number 4, opportunity costs. Ask, if I sell this business today, is there anything better I can buy? If there is nothing, then don't sell. So the truth about time frames is that most investors fail because they confuse a 10-year plan with a 10-month plan. But let me be clear, long-term means long. It means long. That's what it means. It means sitting tight while the market dips 20%. It means sitting tight while friends chase trends and hot stock picks. It means sitting tight whilst your stocks do nothing for months on end. And I've done this. It hurts. You see your stocks, they're not moving. They're just static. So the stock market, remember Warren Buffett's quote, the stock market is a device for transferring money from the impatient to the patient. So don't transfer yours away. If you made it this far, you already have more patience than most. Now build it like a muscle. Trust your research, stick to your strategy, and let time do the heavy lifting. If this helped, like the video, share it with someone who needs that reminder. Comment below how you manage to keep patient. Let others see how you're doing it. And subscribe for more timeless investing wisdom. See you in the next one. Peace.